While the dollar dies, gold returns. This isn't conspiracy theory, it's happening right now. BRICS nations are stockpiling gold at record pace. Western central banks are quietly buying after decades of selling. Eastern countries are preparing for monetary system collapse that Western citizens don't even see coming. Welcome to Financial Shadows, where we expose the currency rebalance pattern reshaping global power. The dollar's 70-year dominance as world reserve currency is ending, and gold is returning to center stage. This happened twice before in modern history: the 1930s Great Depression rebalance and the 1970s stagflation rebalance. We're witnessing the third great currency rebalance pattern, and it's accelerating toward 2026. The pattern is undeniable. When fiat currency trust collapses, nations return to gold backing or accumulation. Not full gold standard. That ship sailed in 1971. But strategic rebalancing to restore monetary confidence and shift geopolitical power. China accumulated over 2,000 tons of gold in the past decade. Russia added gold reserves while dumping US treasuries. India's central bank buying reached all-time highs. What makes 2026's rebalance different is the scale and speed. The 1930s rebalance took years to unfold. The 1970s rebalance happened gradually through that decade. Today's rebalance is compressed into months as digital communication, coordinated actions, and mounting dollar crisis accelerate the transition. BRICS expansion from 5 to 11 nations signals coordinated de-dollarization strategy. Financial Shadows has identified the critical indicators flashing red. Central bank gold purchases hit 60-year records. International trade settlements increasingly bypass dollar. Gold-backed digital currencies are being tested. The monetary rebalance isn't coming. It's already underway, hidden in plain sight, while Western media focuses on stock markets and inflation statistics. The geopolitical implications are staggering. Dollar hegemony enabled American economic dominance for 3 generations. When that ends, and the rebalance pattern guarantees it will, global power shifts east. Your savings, your investments, your purchasing power all depend on understanding this transition before it completes. Think about which countries are buying gold aggressively versus which are selling or holding steady. The pattern reveals who's preparing for currency rebalance and who's caught unprepared. Drop in comments which nation you think is positioned best for the coming monetary reset.
Currency rebalance occurs when nations lose confidence in dominant reserve currency and shift toward alternative stores of value. This isn't abstract economic theory, it's survival instinct at national level. When governments see reserve currency losing purchasing power through unlimited printing, they protect themselves by accumulating gold and reducing exposure to failing system. The mechanics are straightforward. Central banks hold foreign currency reserves to facilitate international trade and stabilize domestic currency. Historically, these reserves concentrated in world reserve currency: British pound before 1944, US dollar after Bretton Woods. When reserve currency becomes unstable through excessive money printing, deficit spending, or geopolitical weaponization, central banks rebalance reserves toward gold, alternative currencies, or commodities. This rebalancing creates self-reinforcing cycle. As nations dump dollar reserves, dollar value falls. Falling dollar accelerates other nations' urgency to rebalance. Gold prices rise as demand increases. Rising gold prices validate rebalancing strategy, encouraging more nations to join. The pattern builds momentum until new equilibrium establishes, either through reformed monetary system or complete currency collapse. What makes gold central to rebalancing is its unique properties. Gold has no counterparty risk. It's not another nation's liability. Gold can't be printed or digitally created. Gold maintains value across civilizations and centuries. When fiat currency systems fracture, gold becomes universal fallback that all nations accept. The speed of modern rebalancing is unprecedented. In 1930s, gold rebalance took years as physical gold moved slowly between nations. Today, digital systems allow instant reserve shifts while gold follows later. Financial Shadows tracks these digital flows, revealing rebalancing already far advanced before physical gold movement becomes obvious. If this investigation is opening your eyes to currency rebalance pattern, hit subscribe and like. Helps us expose more hidden monetary shifts. Current rebalance differs from previous patterns in critical way. It's coordinated. BRICS nations are organizing alternative to dollar-dominated system rather than each nation acting independently. Coordinated rebalancing accelerates transition and increases likelihood of successful alternative system emergence. Which country do you think will benefit most from dollar's decline? China, Russia, India, or dark horse candidate? Your prediction reveals how you see new monetary order forming. The Great Depression triggered history's first modern currency rebalance. As banks collapsed and currencies lost value, nations scrambled to gold. This wasn't coordinated strategy, it was survival panic, creating the rebalance pattern we see repeating today. In 1933, President Roosevelt confiscated private gold through Executive Order 6102. Citizens were forced to surrender gold at $20 per ounce. Once government accumulated gold, they revalued it to $35, a 75% devaluation, transferring wealth from citizens to state. This wasn't theft, it was monetary rebalancing through coercion. The pattern reveals itself clearly. Economic crisis destroys fiat currency confidence. Government accumulates gold from citizens at artificially low prices. Currency is then devalued or revalued. New monetary system emerges backed by accumulated gold. Bretton Woods in 1944 established this new gold-backed dollar system, creating American monetary dominance for the next 3 decades. What made 1930s rebalance successful from government perspective was information control. Citizens didn't understand monetary mechanics. They surrendered gold believing it was patriotic duty. By the time they realized they'd been robbed through revaluation, the transfer was complete and new system was established. Financial Shadows identifies critical lesson. Government gold confiscation precedes currency rebalance. When nation needs gold reserves but citizens hold it privately, confiscation becomes policy tool. This happened across multiple nations in 1930s, not just America. The geopolitical result was clear. Nations with largest gold reserves dominated post-war monetary system. America's gold accumulation through confiscation positioned dollar as reserve currency. Understanding this pattern matters because 2026 rebalance may follow similar playbook. Think about your government's current gold policies. Are they encouraging or discouraging private ownership? The answer reveals their rebalancing strategy. Share your country's approach in comments. Nixon's 1971 decision to sever dollar-gold convertibility triggered the second great currency rebalance. Unlike 1930s confiscation pattern, 1970s rebalance happened through market forces as confidence in fiat dollar collapsed and gold prices exploded. The stagflation crisis revealed dollar's fundamental weakness. Unlimited money printing to fund Vietnam War and Great Society programs destroyed purchasing power. Foreign nations holding dollars demanded gold conversion. America faced choice: fiscal discipline or abandoning gold backing entirely. Nixon chose abandonment, triggering immediate rebalance. Gold price soared from $35 per ounce in 1971 to $850 by 1980, a 24-fold increase in purchasing power. This wasn't speculation. It was global rebalancing from paper dollars into tangible gold. Citizens who understood the currency pattern protected wealth. Those who trusted fiat lost purchasing power to inflation. The 1970s pattern introduced new element: petrodollar system. Unable to back dollars with gold, America negotiated with Saudi Arabia to price oil exclusively in dollars. This created artificial dollar demand, replacing gold backing. Nations needed dollars for energy, maintaining reserve currency status despite fiat nature. What Financial Shadows finds critical is how temporary the petrodollar solution proved. 50 years later, that system fractures as oil producers accept alternative currencies. Saudi Arabia's 2023 decision to accept yuan for oil sales marks petrodollar's beginning end, forcing new rebalance toward gold or alternative backing. The lesson is clear. Every fiat currency rebalance attempts temporary solution that eventually fails. Gold standard was replaced by Bretton Woods. Bretton Woods was replaced by petrodollar. Petrodollar is being replaced by what? Gold return or digital currency control? Which proved worse for average citizens? 1930s gold confiscation or 1970s inflation theft? Both were currency rebalance mechanisms transferring wealth. Your answer reveals which government tool you fear more. The third currency rebalance accelerates now, combining 1930s government accumulation with 1970s market-driven gold surge. But 2026 pattern includes unprecedented element: coordinated Eastern Bloc strategy to end dollar dominance through systematic rebalancing. BRICS expansion from 5 to 11 nations signals organized alternative to Western monetary system. These countries represent 45% of global population and 35% of world GDP. Their coordinated gold accumulation and trade settlement in alternative currencies isn't coincidence. It's strategic rebalancing to escape dollar dependency. Central bank gold purchases hit 60-year records. China accumulated over 2,000 tons. Russia doubled reserves while dumping U.S. treasuries. India, Turkey, Poland, all buying aggressively. This isn't portfolio diversification, it's preparation for post-dollar monetary system. The de-dollarization pattern accelerates measurably. Saudi Arabia accepting yuan for oil. Russia-China trade settling in rubles and yuan. India buying Russian oil in rupees. Each bilateral trade agreement bypassing dollar represents another brick removed from petrodollar foundation. What makes 2026 rebalance potentially catastrophic for dollar is the coordination. Previous rebalances happened organically as individual nations protected themselves. Current rebalance involves strategic planning among nations representing half of humanity. They're not just abandoning dollar, they're building replacement system. Financial Shadows projects this rebalance reaches critical mass when BRICS announces gold-backed digital currency or settlement system. Rumors circulate about such announcement at upcoming summit. If true, the rebalance accelerates from trend to avalanche. The pattern speed is most alarming. 1930s rebalance took decade. 1970s rebalance took decade. 2026 rebalance compresses into years or months as digital systems enable instant capital flows and coordinated action. Are you positioned for currency rebalance, or will it catch you holding depreciating dollars? Percentage of gold in your portfolio reveals your rebalance readiness. Dollar hegemony ending reshapes global power structure. For 70 years, America printed dollars while world accepted them for trade, creating economic advantage no empire in history enjoyed. That privilege is dying through currency rebalance, and consequences will be profound. When dollar loses reserve status, American government can't finance deficits through printing. Foreign nations won't accept dollars for goods if dollar isn't needed for trade settlement. This forces fiscal discipline America hasn't practiced in generations. Government spending must match tax revenue, a shocking constraint after decades of unlimited printing. For average Americans, the rebalance means imported goods become expensive as dollar weakens. Electronics, clothing, vehicles, everything produced abroad costs more. Standard of living declines as purchasing power erodes. This isn't theory, it's mathematical certainty when reserve currency status ends.
Eastern nations benefit proportionally. China, Russia, India position themselves through gold accumulation and alternative trade systems. As dollar weakens, their gold-backed currencies strengthen. Manufacturing, resources, labor, all shift toward nations holding real assets rather than paper promises. The wealth transfer will be massive. Estimated $70 trillion in global reserves must rebalance into something else. Nations holding gold gain. Nations holding dollars lose. Citizens in gold-accumulating countries preserve wealth. Citizens in dollar-holding countries watch savings evaporate through rebalancing inflation. Financial shadows sees the pattern clearly. Every currency rebalance transfers wealth from old empire to new powers. Britain to America in 1940s. Now America to BRICS in 2026. The mechanism changes, but outcome stays consistent. Which nation emerges as dominant economic power post-rebalance? Your prediction shows whether you see multipolar world or new single hegemon rising.
The currency rebalance investigation is complete. 3 historical patterns, 1 consistent outcome. Gold returns as fiat fails. 1930s confiscation. 1970s stagflation. 2026 coordination. Each rebalance transfers wealth from those holding paper to those holding metal. Understanding the pattern provides advantage only if converted to action. Financial Shadows doesn't offer hope. We offer strategic positioning based on historical precedent. The dollar won't suddenly regain strength. The rebalance won't reverse. Your wealth either transitions with the pattern or gets crushed by it. Gold allocation becomes essential during currency rebalance. Not speculation, preservation. When monetary systems shift, gold maintains purchasing power while paper currencies fluctuate wildly. How much gold? Historical rebalances suggest 10 to 20% minimum for wealth preservation, higher for aggressive positioning. Geographic diversification matters equally. Wealth concentrated in single currency zone becomes vulnerable during rebalance. Consider holdings across multiple jurisdictions, preferably in nations accumulating gold rather than dumping it. Eastern currencies backed by commodities and gold will strengthen as Western fiat weakens. The cryptocurrency consideration divides analysts. Some see Bitcoin as digital gold offering rebalance protection. Others see it as speculative bubble vulnerable when governments crack down. What's certain? Don't bet everything on single solution. Diversification across gold, silver, stable foreign currencies, and select cryptocurrencies provides multiple rebalance pathways. Critical recognition. You can't stop the currency rebalance, but you can position yourself advantageously. Nations are rebalancing. Central banks are rebalancing. Wealthy elites are rebalancing. The question is whether you join them before or after your purchasing power evaporates. Financial Shadows has exposed the pattern. The rebalance from dollar to gold is accelerating toward 2026. What percentage of your wealth is positioned for currency rebalance versus trapped in depreciating fiat? Drop your honest allocation. The community learns from collective positioning.